Welcome, and thank you for joining us. Really appreciate your time. We're Modern Community Capital. We're going to talk about our Community Bridge Loan Program. My name is Damon Wilkerson, the Chief Lending Officer for Modern Community Capital, and we'd like to say we take an institutional approach with a community-based perspective. Our target audience today are investors, impact investors, family offices, groups, pensions, and the like, and anyone interested in a collateralized fixed income return annualized secured by real estate, as well as interested in community development and access to capital for underserved markets. And yes, you can combine profits and positive social outcomes. And our strategy is really designed to make money fully collateralized through filling major financing gaps that we see in the market for, in particular, minorities, women, emerging and low income communities, and dealing with the nuances that we find in a variety of the subsidy programs. The product typically is a commercial real estate bridge loan, and we're usually looking in that 500,000 to $5 million range. Right now, rates would range from anywhere from 7.5% to 10%. And each of these deals are separate direct loan participations. So we are not a fund. So every deal is its own separate direct loan participation into real estate. As of right now, we see major gaps in a community development finance market ecosystem, and it's creating a lot of opportunities as well. There's a lot of challenges in the market, but it's creating a lot of opportunities. Our underwriting, we really take a dual underwriting approach where we have an institutional style process and efficiency, which is important, but we also have a community impact perspective and overlay into that underwriting model. The company, we have over 20 years of experience working with commercial real estate lending, tax credits, subsidies, and it really gives us a unique perspective in deal flow. Right now, our major focus is in and around emerging and transitioning communities and opportunity zone census tracts within the metro New York City, and then select areas in New Jersey, Connecticut, Maryland, and Pennsylvania, and we're hoping to expand beyond that. The focus of the program is commercial property ownership, affordable housing, MWBE developers, local business owners, multi-generational properties, nonprofits, emerging developers, community sponsored projects, and innovative catalytic projects that we see in the marketplace. Just a brief background on Modern Community Capital is just that throughout our 20 years of experience, we've continued to find large bridge lending market gaps. It's almost like the Wild West, but particularly in products available to MWBE developers and low-income communities, we see a high demand for products targeting asset-rich, cash-strapped local owners, early stage emerging developers and nonprofits with access to entitled land, tax credit deals like LIHTC, new market tax credits, and historic tax credits, and projects aligned with targeted community benefits and social impact goals. Our company, they have three pillars, which is commercial real estate brokerage, commercial mortgage brokering, bridge lending and exit planning, and then community development finance and tax credit strategies. Thinking about the why, like why are we so passionate, which I'm extremely passionate about the need, particularly within these communities for commercial real estate, but why commercial real estate and why now? Commercial real estate is really the key to a community ecosystem. It's vital to the culture, the lifeblood of local communities. It drives wages and a number of things. And COVID has dramatically changed the demographics of commercial real estate across the country. You're seeing it in so many asset classes in commercial real estate that COVID has changed the for good and bad in different areas. Markets have limited zoning in certain areas, and that increases the demand and value, which we've seen a tremendous amount of over the last couple of years. But commercial real estate really drives so many things from housing, jobs, healthcare, healthy food options, education available, the nightlife, financial service availability, office space, childcare programs, and services, manufacturing, and just the ability for small businesses to survive. That ecosystem is vital to them. But why now? Emerging domestic markets are non-correlated and historically have been in they're their own ecosystem within larger markets. The bridge lending space is extremely fragmented and it creates gaps and demand. For what we see usually in that 500,000 to $3 million space is the sweet spot that we like to see. Because of COVID and because of a lot of the social items that have perpetuated over the last few years, there's an abundance and availability of subsidies. Like we just had a new market tax credit allocation of 5 billion. There's a ton of grants available, a number of CDFI programs, and these are the programs. A lot of these programs we'll work with and leverage and bridge to work with those programs that to fit into those models. Traditionally, and rightfully so, the focus has been on affordable housing, which is absolutely necessary, but we think there hasn't been enough focus on just the importance and the ability for these communities and our communities to own and have control over commercial real estate. Predatory lending is so prevalent in this market. You have so many high interest rate programs that ultimately can become the death knell in a lot of deals. And there's a lot of loan to own programs. You come in and you structure it in a way that makes it impossible to be repaid, and the lender is able to take over a property at such a low loan to cost. Right now, because of the market, banks have pulled back. You have rising interest rates, so the takeout options available have changed because of the debt service calculations now that interest rates have gone up. And our process is really unique. We have bridge lending, which is the capital and the core, and then on top of that, which is equally important, is the technical assistance and the exit partnerships that we have. So just some ideas, and you can take a look at the slide, but the origination and our community partners are extremely important. Just an example of some partnerships are like the York College Small Business Development Center in Queens, New York, the Minority Business Development Agency operated out of Brooklyn. There's some key partners that we work with, as well as a number of other community development organizations and groups. And then on the technical assistance side, it's a really robust platform where we'll do business, exit planning, projections, supporting the project. Leveraging partners is extremely important, from CPAs, legal, credit counseling, real estate services, different agencies and community groups that we're able to leverage, and then ultimately into the implementation. And then within that implementation are the exit partnerships that we align and work closely with, from banks to CDFIs to non-bank lenders, different programs, tax credits, subsidies, SBA lenders, private investment groups, institutional partners, and various agency programs. Just a high level overview of an investment strategy. Like we mentioned, we do play an active role in the process, from origination through takeout, and understanding and underwriting those takeout options. And so from an investment standpoint, you're typically looking at, in that 8 to 10% annualized return, senior secured commercial real estate participations, community and impact and social impact metrics that we work out to make sure they're hitting your specific goals. And then 500,000 to $5 million loan participations. Like I mentioned, it's not a fund. Each participation is direct into a specific deal. Quarterly income payments, an 85% max loan to value typically. Our high touch consulting model, and then 6-month to 3-year terms depending on the deal, and our proprietary deal flow. How do you participate? This is just a general overview, and we'd love to speak with you and go more in depth so you can understand exactly how we do it, go into our underwriting and the like. But we're really looking for groups, investors, pensions, nonprofits that have the ability to invest at least $100,000 into a single or multiple deals over a 2-year minimum period. And that's not to have it tied up for 2 years. It just means that for the next 2 years, just to know that there's specific capital available, and that helps us into specific deals. And it's a capital call availability. So once you give us criteria, we're able to then give you particular deals and then do a capital call to then fund specific deals. Capital is escrowed prior to closing and then drawn down directly into first lien mortgages. So it's a very transparent process. If for whatever reason, and this, the real estate world, there's a number of reasons why something may fall through, but if a deal doesn't close for any reason, funds are returned if the deal doesn't close for any reason out of the escrow. So money goes directly from investor to escrow directly into a deal. And so for our next step, we fill out an initial investor questionnaire so we get to know what types of deals would fit your model, what type of social or impact criteria you'd be looking for. And then schedule a call so we can answer any questions and really talk about how do we move forward. We're excited about this program. Really appreciate you taking today. Again, my name is Damon Wilkerson. Our company is Modern Community Capital. These are our contact details. So feel free to email us at info@moderncommunitycap.com. And our number is 646-899-0993. Please leave a message if no one is there to answer you, and really appreciate your time. Take care.